Joining in to talk about this massive bull charge today on the show is Nischal Maheshwari. He's head of institutional equities at Edelweiss Securities. Nischal, it's great to have you on the show. 8,000 is here, and I must say, I was reading some of the commentary, some of the comments that you'd made earlier. You had called exactly this earlier in May, saying that if monsoon predictions are on track, if earnings are all right, we might see 8,000 plus. What next for this market?
I think the good time has just begun, basically. So you have got a good monsoon. I think that there has been in the last quarter or the current quarter, which is just going on, good surprises as far as numbers are concerned. So definitely, I think it's a hopeful time.
Nischal, well, you know, what has now we are at the end of the earnings season. Are you definitely getting a sense this is that earnings turning quarter?
Definitely, I think, Lata, a bottoming quarter is definitely on, basically. We may not see anything worse from here going ahead. And I think if one or two quarters ahead, basically, we might start seeing earnings getting revised upwards.
Okay.
And if there's going to be a good rainfall season, I'm very hopeful that the second half of the next year is going to be definitely revision of earnings for FY17.
I was counting 2 or 3 positives. Tell me if I'm getting carried away. One, more mid-caps were positive than negative. I mean, Varinder, our head of research, does this wrap of good and bad results. And it's almost 6:4, good is to bad. The second thing, dog sectors like steel and power. I mean, look at, say, a company like Ratan India Power. Stocks which were reporting losses for a goodish bit or very poor numbers, steel included, have shown better earnings this quarter. And finally, the ones that were always performing, the consumption sectors, reported better EBITDAs and better margins this quarter. So are we really adding up to an upgrade of next year's earnings? Next year, I mean FY17 earnings. What are you working with?
So I don't know the first two things, basically, which you have put out there. We do not track it so closely, and we don't, to be frank, I don't know Ratan Power. But
no, I just meant by example, there were power companies which showed better numbers.
I agree, but I think what has really surprised me has been the Larsen number yesterday. And that's been one of the companies, basically, which we track very closely. And there are one or two things which I would like to highlight is obviously one is the working capital improvement, which they have started showing by 100 basis points, which is for a starter. I think it's a good way to go forward. Secondly, their confidence of around 12 to 15% kind of a top line growth next year. And again, on the order book side. So I think these are some of the surprises which they have come across. Obviously, the margins have also surprised everybody on the positive side. So Larsen being a fair weather stock for the market and for the economy, I think they coming across saying that things are improving as far as execution is concerned in India. That should actually, I think that's enthused the market, and we've seen this kind of a run-up happening. I believe it's going to trickle down to the smaller companies and other sectors I think in the next 2 or 3 quarters.
It's interesting you say that. That's exactly my next question, Nischal, that, you know, is it really time to start getting a little aggressive with cyclicals? We might start seeing a trading bounce, as some of our other guests also mentioned today, in a lot of infrastructure stocks from here on because of what Larsen has done. But do you get the sense that the tide is really turning in a more meaningful way for companies like L&T and, of course, stocks in the sector?
I definitely see that for the construction side of the business, basically, the EPC part of the business. We have seen very strong order book, basically, which has been there for the last, I think, 2 or 3 quarters, especially the government orders has been very, very good. We were actually not seeing that much in the numbers. Now that in the current quarter, we have started seeing some numbers also coming through as far as execution is concerned. So I think the first one will be the construction companies. I think that has to trickle down to the capital goods, which is sort of an intermediary good basically in the chain. And when that actually starts picking up, you can really say that the private sector has also come back into the market for capex. And that should enthuse the market and the whole economy quite a bit.
Okay, the final and the most meaningful question, Nischal, from our broad swathe of viewers. Buy, hold or sell now?
So it obviously depends from sector to sector and from your time horizon. So if you are more than a year time horizon, basically, then I think this could be a good time to actually start accumulating. And every fall in the market should be definitely looked at an opportunity to buy.
Okay. So what will you buy? I mean, what kind of a gain can an equity investor expect in the next 12 months, say from the index, because it's difficult to be too choosy, and what in the index will work?
So I think cyclicals is the way to go forward, basically, whether it is your capital goods companies, whether it is your construction companies, banks, autos. So I think the urban consumption also still looks pretty strong. If the rainfall is good, basically, then I think some of the rural good companies also should start pitching in. So I think these 3-4 sectors should be definitely moved from the defenses which most of the market has been playing upon.
Nischal, I have questions on two specific companies and stocks for you. One is BHEL. We'll get numbers tomorrow. Of course, the provisional results made the market quite optimistic. I remember, I mean, there was a big move on the stock in April itself. Since you're watching for signs of that turnaround, L&T has given us that green light. What will you watch for from BHEL? And I believe you've had a slightly optimistic view on ICICI Bank, which seems to be a bit of an outlier view on the street. So if you could just run us through that, given the distinction that's played out between other private sector banks and an ICICI Bank.
So as far as I think BHEL is concerned, I would be looking out for two things. One is obviously the order book, and secondly, the margins. I think these are the two things basically which the market has been worried about quite a bit. And I think for BHEL, it would be some more time to go, because even if you look at on the power side, as far as Larsen is concerned, and yesterday's Thermex results also, power is still not recovered. And I believe there is some more time to go. So I think BHEL should be closely watched. As far as ICICI is concerned, given that the stock was beaten down the most because of the cyclical downturn, on a cyclical upturn also, I think it should be rewarded. That is what our thesis remains to be, because if you are looking at turn in the economy, basically interest rates being cut, you have a better rainfall. I think all these things are basically indicating towards a cyclical upturn, and that should actually bring more rewards for the stocks basically which got beaten down the most.
All right. Nischal, it was a pleasure speaking with you. Thank you very much for analyzing what has been an extremely pleasant day for the bulls in the markets.